This is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Insight. Federal Reserve Janet Yellen has reassured investors that the U.S. economic growth is sturdy enough to withstand the turmoil of emerging markets. Translation, be concerned. Turmoil is probably the word of the day. And here's why I think it's important. The whole reason the Fed decided to hold off on pulling the trigger on a rate increase this past week was because it said it's considering the spillover risks, I'm quoting, to the U.S. economy from the turmoil in global markets. Now, look at how contrary this is. Federal Reserve Chair Janet Yellen assured investors that U.S. economic growth is sturdy enough to withstand turmoil in emerging markets, but in order to hold rates, they're considering the spillover risks of the U.S. economy from turmoil in and from global markets. Translation, the S&P 500, kind of the gold standard of really the direction of the economy, has lost 5.7% in this last quarter. And this will be the first back-to-back quarterly losses of the S&P since the market's losses that resemble two back-to-back negative quarters in 2011. So I think turmoil might be kind of the word of the day. Now, I talk about on Hidden Wealth Radio this weekend, the market is a wheelbarrow of dynamite waiting to blow. Now, that's from Bill Bonner from a investor newsletter that I subscribe to that a client had sent to me years ago. And I think the real question is, does the Fed move the market or do our markets move the Fed? Because it's very clear, up 200, down 200, up 200, down 200. People are getting nowhere fast, especially when you look at the fact the net result is almost a 6% loss in the last 90 days. And remember, every money manager on the planet aspires to try to get as close to the S&P performance, which no one's ever done long term, which means most people watching this have actually lost a lot more than 5.7%. Now, the reason that we should be concerned, U.S. market data has reflected that manufacturing now has stayed at a 2-year low. China is at a 6.5-year low based on manufacturing output. Worries over China's led global economic slowdown is a big part of this volatility. And then the Fed citing market volatility. Well, hello. One client, and I'm going to give you some solutions here. One client this past week I was referred to said, I've not ran into any one person or entity that seems to be able to put the whole picture together. How to save tax, prevent losing to the markets, and outperforming inflation and returns so that you always maintain your purchasing power to sustain your preferred lifestyle. Well, folks, here's the opportunity. Simply go to solvemyretirement.com. In fact, the first 50 people, my new video book, I want a bonus gift. There's 2 bonus gifts. For those registering, just for registering, I want a bonus gift you the 12 key questions every retiree must answer, because it's going to show you how to shield your savings from being lost, as well as not just from the market, but also from taxes. Now, for those that register and attend, I want to gift you, after attending, the retirement readiness checklist. So whether you're retired or not, this checklist is key, and I'm really excited to share it with you. Simply go to solvemyretirement.com. There's still space available. We still have room to honor these bonus gifts. And I want to get this data into your hands. I think it's more important than ever. You know, you've worked hard for your money. We want to teach you how you can work smarter to protect it, especially with what has and will continue to be a very volatile economic climate. SolveMyRetirement.com. Here's to you finding your hidden wealth solutions.